All right, traders, a very warm welcome to you all. I am Devang, and this is the episode 2 of the Sniper Trading Entry series. And today we're talking about a very powerful trading system, a very highly effective trading system that we call inside bar trading. Inside bar is a very effective technique which you can use in the market, whether you are a beginner or whether you are already an advanced level trader. This is something I've been personally using for a very long time, and most of my profitable entries on day trading and on swing trading have come from this concept. So we'll discuss in this video what exactly is the inside bar trading, and over the video I'll be showing you a lot of examples, tons of examples. How can we use this inside bar trading? How can we increase our efficiency and risk reward ratio when it comes to the inside bar trading? So first of all, let me explain why do we use this concept. The reason why I call it very highly effective is because we do not need any indicators when it comes to inside bar. We just have to focus on our price chart, and the price action basically guides us through the market. So before I show you what an inside bar is, let me tell you why this concept is very relevant. So let's say we have a very strong resistance at this point of price, and our stock has been rebounding from this level of resistance. And once the price breaks that level of resistance, what most of traders do is they wait for something called a retest. The earlier resistance becomes a support, and then they expect to buy it here with a target on the higher side. This is how the average trader would like to trade the market. But the truth of the matter is that this might happen 80 or 75% of the times, but there are still 25% of the times that a retest in the market does not happen. And if the retest in the market does not happen, you essentially miss your trading entry. You essentially miss that explosive move that has happened in the market. This is not only on the breakout side, but the same concept also applies on the breakdown side. When you have a support, it is multiply retested, and you break down, you wait for a retest, and then you would like to go short. So we are spending too much time waiting for a move that novice traders are depending upon. So to eliminate this retest function, to be more highly effective when it comes to breakout trading, this is one sniper trading entry I want you all to incorporate in your trading style. So before I get started, make sure you hit that like button, hit that notification bell, hit that subscribe button, and mention in the comment section below if you are finding these videos useful. So let's get started, traders. Let me show you an example of what the inside candle looks like. This is what it's called an inside candle. It's also called an inside bar. It is composed of two things. So if you see this exact example, you have a very big green bar. So first I'll talk about the breakout when the price goes higher. So on the breakout side, you will have first a very big green bar. You want a big bar. You don't want a doji kind of a bar. You want a very big solid green bar. As you can see, this is also called the mother bar because this is what the analysis is based on. So after this big green mother bar, there is another candlestick which is formed within this green bar. So we have a mother bar, and within that mother bar, you have another red color. So it's an opposite color candlestick. So you have a big green bar, mother bar, then you have a small red inside bar within that green candle. And this is called an inside bar setup. What are you waiting for? You can't immediately go long on the next candle. You are basically going long only when these highs are broken. So when these highs are broken by this big bar, then you can go long and keep on trailing the stop loss because your entry position would be very comfortable. You can see another example. There is a very green big bar. This is called the mother bar. And then you have something called an inside candle. So a red bar, a smaller bar. Mother bar is a big bar. The inside bar will be smaller. So this small red bar will be inside the highs and lows of the mother bar. You are waiting not to immediately long on the next candle, but once these highs are broken, then you can initiate the long and then you can expect the profit. I hope these points are clear. One big mistake people make is after they see an inside candle formation, they immediately go long whatever happens. But you don't have to immediately long. You have to make sure that these highs are broken, then go long. That's number one. Number two is that, when you get an inside bar, the first candle has to be very big. It should be a very big solid green bar. so as to show that buyers are in control, they are in focus. Then there has to be a pause candle, so a small red bar. So please have these couple of points in your mind. Why do these candlestick patterns work? It's a candlestick pattern, but why does this setup work? The reason is because if you see our videos in the psychological series, we have told you very well that power moves don't happen in the market. When the markets have to go higher or lower, what happens is they go higher and then they will pause for a little bit and then again they will go higher. This is essentially what an inside bar is. The reason is, for example, if I have to take the stock from 100 to 200, the people who bought at 100, they only have the power to take the stock to 130, 140. To take the stock to 200 levels, they have to halt maybe at a 120, 130 level, let the new buyers come in, and here that is why the price can go to 200 levels. I hope you are understanding these couple of psychological points. It can happen on the downside also. If you are looking for intraday short opportunities, it can happen on the downside also. This is an example of the inside bar on the downside. So you can see a very big red bar. This is the high of the red bar. This is the low of the red bar. This is called a mother bar. The next candle is an opposite colored candle. It should be within that red bar. You can see this green inside bar is within that red bar. So whatever is the color of the mother bar, that will be the direction of the breakout. If the mother bar is green, the second bar is red, and then breakout is in the upside. If the mother bar is red and the inside bar is green, then the breakout will be on the downside. I want you all to understand these points. So you can see in this example, the inside bar is within the red mother bar. You can't immediately go short here. You have to wait for these lows to be broken. When these lows are broken, so you make short when you can't short here, you can't short here, you can't short here, you can only short on this candle when these lows are broken, and then you can keep on trailing the stop loss, because this is one sniper entry. Not only can you be very proficient on your intraday trading, but also on a swing trading perspective. So what I'll do is I'll show you some examples. I'll show you how I set my own stop loss when it comes to the inside bar trading, and then you can try it out on your own. I'll suggest please back test it before you try it out, so that you have a lot of training and a lot of examples how things work. This is the example of Page Industries, and if you see what happened is, I'll show the price action. You got a double bottom kind of a formation. If you're into technical analysis, you know double bottom is a good bullish pattern. So what happened is, after a double bottom, after this resistance was broken, you had an inside candle formation here. Look at the region I've encircled. This is called an inside candle. The reason is, you had a very big green bar, number one. That's a mother bar. Inside these highs and lows of the mother bar, you had a small pause candle. This pause candle is called the inside bar. This red candle will be always the opposite color of the first mother bar, which is the green candle. What are you waiting for? You are waiting for to go long when these highs are broken. And once these highs are broken, that is one time where you go long. This is called the inside bar trading setup. And just around last month, you can see the amount of profit this setup has given. One thing I want to add is, a lot of people, what happens is, we go fishing for new strategies. This is one strategy, personally, I'm telling you, is very, very highly effective. And every professional trader is probably using this strategy right now. So if this strategy gives you about 2-3 stop losses, do not worry, because things are meant to give stop losses. Increase your sample size, try it out 20 times, try it out 30 times. You will see the consistency, you will see the profit it gives you. That's number one. How do you set a stop loss? So if this is my inside bar setup, how do I set a stop loss? There are multiple ways people set stop loss. In inside bar trading, people have to trail stop loss because the momentum is fast. So you can trail the stop loss. That's number one. Number two is, either you can set a stop loss below this green candle. If you see that breakout candle, if you are a risky trader, you can set your stop loss below that green candle. That is one approach a lot of people are using. Another approach a lot of people use is, basically they like to put a stop loss on the mother bar. If you see the mother bar, the 50% of the mother bar becomes a stop loss. So if you see in this example, that actually equates to the same. If you can either put it below the breaking bar or 50% of the bar. If you are very, very conservative, if you want to play less risk reward and more conservative in nature, then the safest option is to put the stop loss below the mother bar. this is probably not going to be hit, but if it's hit, you accept the loss. So I would suggest you try out all these three variations, see what you are comfortable with. If you are risky, put it below the breakout bar, or you can put it 50% of your mother bar, or if you're very, very conservative, you can put it below your mother bar. These are three approaches, but make sure when the movement happens, I want you all to trail the stop loss, because the move will happen fast and you will be able to make a lot of profit. So inside bar will help you a lot, because the retest function doesn't happen. Things keep on moving higher. You get a big breakout, you get a pause candle, another breakout, and you can trail. Let's look at some more examples. Now I look at the intraday setups. I showed you a swing example. This is the charts of Credit Access Grameen, one stock we recommended you to go long in our 50 stocks video. So what happens in the inside bar is you can see a good uptrend. There is a pause. There's a red candle showing a pause inside that green candle. And once this is broken, you can see you can go long. Sorry, this is the other example. You can immediately go long on this candle. I have told you you can keep the stop loss below this red candle, and the price kept on going higher. Another example is you can see and after the inside candle, if you miss this trading entry, another big green bar followed by an inside candle, a doji showing a halt of that buyer movement. Please remember, one doji cannot change the trend. A lot of people, what they do is they see a doji and they go reversal on the market. That is now not how dojis are meant to function. If you get this doji, this means there is some kind of a halt in the trend so that new buyers can enter in the market. So a big green mother bar, inside candle within the mother bar. Once this high is broken, you go long on this candle and you can see the profit opportunity the markets have given you. Another example would be on the 6th of November, just about yesterday. You got this is the first 15-minute candle, very big green bar, a pause in the trend. You can see the highs and lows. The red candle is within that high and low. And once this high and low is broken, you go long immediately, keeping a stop loss below the outside bar. And this is something you can see, the stop loss never got triggered, and the movement that you got was extraordinary. On the downside, an example I can show you on Credit Access is this example. You saw a breakout that was happening. So this is a trend line breakout that happened. So when can you enter in this trend line breakout? A lot of people try to wait for a retest, but the retest never happened. But this is an inside bar setup that you can see right now. A big red mother bar, green candle is within that highs and lows of the mother bar. And immediately when this outside candle broke this mother bar, you go short over here and keep a stop loss above this outside candle, and you can see the profit, about 15 rupees profit in just a matter of 5 to 10 minutes. It is a highly profitable setup. This is something I showed you in the last 2-3 days on Credit Access Grameen. I can show you some more examples so that you can understand the concept much better. This is examples of Voltas. I'll show you on the short side, so things become quite interesting. So even in Voltas around 23rd of October 2020, you can see a trend line support is broken. When can you go short? Look for an inside candle trading setup and a very big red bar followed by a halt green candle. You are inside that mother bar. Once these range is broken, you can immediately take your shot and trail the stop loss below. That's all. Another example is if you see this setup over here, there is a big red bar. Inside is the green bar. Once this is broken, initiate short, you can see the profit that you're getting. Another example on the long side would be around 27th of October. You are getting green candles, one green candle. You can see a halt candle within that green candle. Once these highs are broken, initiate long. So from 700, you got a profit till 705. What was your stop loss? Stop loss was 698, 2 rupees. The profit was more than 6 rupees. So that's a good 3:1 trade that you're getting on Voltas. Let me show you one last example on the inside candle trading, because it's a relatively easy concept. So I want you to incorporate in your trading journey. So this is the charts of Maruti. Again, on the short side, you can see what's happening here. A good downtrend is being formed. The swing low has been broken. So you are short on the market. Once the swing low is broken, you wait for a retest, but that retest function doesn't basically happen. So we are now waiting for something called an inside bar candle, a big red candle. Within that red candle is a big halt green candle. And once this small green candle is broken, immediately go short here and you can trail the stop loss and increase that profit margin. Another example on Maruti would be when this big red candle is there, another halt candle in between that green candle. And once this is broken, again, you can go short and you can see the profit opportunity that's happening in the market. And a final example on the long side would be a green candle and the red candle is within that green candle. Wait for this highs to be broken. Once this is broken, immediately go long in the market. And this is the exact profit that you are looking for. I hope this trading system is clear. Let me know in the comment section if you like this video or not. Give it a thumbs up, subscribe to our channel and click on the bell icon. And I will see you tomorrow in our episode 3 of the Sniper Trading series. All right, guys, thank you so much.